Have you ever come across the term electric vehicle bubble? This refers to a market phenomenon where the valuation and interest in electric vehicles, EVs, escalate quickly, potentially to unsustainable levels, leading to concerns about a possible correction or crash in prices and demand. The bubble suggests that, despite the long-term growth potential for EVs, the short to medium-term market enthusiasm might not fully align with the operational and financial realities of companies in the sector. Today's discussions revolve around whether this bubble is on the verge of bursting. Instances of rental companies returning electric vehicles might indicate operational challenges, such as higher maintenance costs or customer dissatisfaction with vehicle range or charging infrastructure availability. However, this doesn't necessarily point to intrinsic issues with specific brands, like Tesla, which continues to innovate and expand its customer base. But what's really happening with rental companies that are returning these vehicles? Is there a serious issue with Tesla cars leading to these returns? Let's delve into this. The Hertz turnaround. Hertz, a giant rental company in the United States, also operating in other countries, but primarily known in the US, plans to swap 20,000 electric vehicles for traditional combustion engine models. The decision-makers are opting to revert to gasoline or diesel-powered vehicles. What prompted this exchange of 20,000 electric vehicles? It's a point worth pondering. Why does Hertz want to sell a third of its electric fleet? Initially, it faces significant losses after purchasing Tesla cars, which then reduced their prices. As a result, when attempting to resell them, the rental company incurs losses, a major annoyance. It's important to note that Hertz underwent financial difficulties during the pandemic, even filing for bankruptcy. Despite this, Hertz wasn't the only company to face such issues. As for the electric vehicle market, sales are on the rise. Therefore, what's happening with Hertz appears to be an isolated case. Sales of electric cars and manufacturers' plans are advancing. Thus, Hertz seeks to sell its electric fleet and return to combustion vehicles. While this decision raises concerns, it's crucial to consider the broader automotive market context. Electric vehicle revolution. In the current automotive market landscape, a remarkable transformation is underway. BMW is converting one of its historic factories in Germany exclusively for electric vehicle production. Honda has revealed ambitious plans to launch a new range of EVs starting in 2026. Although this announcement might seem a bit late, Honda's intentions are clear. Fiat has decided to invest in a battery-focused startup, highlighting the growing interest in advancing this technology. Stellantis, a conglomerate including brands like Fiat, Jeep, and Citroën, plans to start producing hybrid vehicles soon and promises domestic electric vehicles by 2030. This movement suggests a caution among manufacturers in accelerating the release of electric cars, possibly due to technological challenges, especially regarding batteries, which continue to evolve. The situation with Hertz returning Tesla cars raises concerns about the depreciation of these vehicles. In Brazil, anticipation grows for the launch of a BYD model priced at 100,000 reais, promising to shake up the market, even affecting popular models like the HB20. This year marks a turning point, with electric cars gaining popularity in Brazil. Given that vehicles in this price range attract the average consumer, an electric car for 100,000 reais presents an appealing option. Despite setbacks faced by Hertz, the production and sale of electric vehicles continue to rise. Manufacturers are setting goals for the distant future, like 2026 and 2030. There's a risk that, by acting slowly, renowned brands might lose market share to Chinese competitors and Tesla in the electric vehicle market. Despite the high costs associated with batteries, the interest in and sales of electric cars show solid and real growth. The future of electrics. Why have they expressed dissatisfaction by selling the vehicles? It was recently reported that the decision to sell stems from reduced demand for electric vehicles. When choosing a rental vehicle, individuals tend to prefer fuel-driven cars, which are more accessible and involve higher maintenance costs for Hertz. This is because half of the electric fleet is used by Uber drivers, leading to significant wear and tear on the vehicles. Thus, while the driver saves on fuel, Hertz bears the maintenance costs. This rationale seems logical. Hertz may have erred in acquiring expensive vehicles to rent to Uber drivers. The driver saves on fuel, but the maintenance burdens Hertz. Additionally, there might have been a planning mistake, with people showing a preference for combustion cars. Many choose this type due to the ease of refueling, with stations widely available. However, it's crucial to note that Tesla car sales are on the rise. Production comparison between 2014 and 2023 highlights this increase. It's not just Tesla, BYD also stands out in the competition, followed by other manufacturers. Volkswagen, BMW, and Mercedes seem not to take this segment seriously. If they truly wish to participate, something is being done incorrectly. Electric vehicles face the challenge of high battery costs, though a reduction in price is anticipated, currently significantly impacting. The cost of replacing a battery once accounted for half the vehicle's value. Today, it remains a considerable expense, but this cost is decreasing. Therefore, the battery's cost as a